Again, my view is inflation, or kind of the house view is inflation is going to be persistently higher. And that can happen in the very short term, like literally weeks. And I think the structural forces have changed.
How can one earn money while inflation is high? A number of asset groups do well under inflationary conditions. In the past, tangible assets like commodities and real estate have been thought of as inflation hedges. Certain specialty securities, such as scrutinized debt, inflation-indexed bonds, and certain industry equities can preserve the purchasing power of a portfolio. Bill Ackman of Pershing Square raised worries about the economy, saying he thinks aggressive rate hikes have caused it to slow down. The Federal Reserve has raised interest rates to their highest point since early 2001 in an attempt to combat persistently high inflation, while also suggesting that borrowing costs will remain high for an extended period of time. The central bank predicted that last month that rates would rise once more this year. A recession is a concern shared by many on Wall Street as a result of the economy's lag from the significant tightening measures implemented since March of last year. The billionaire hedge fund manager stated that, given the current climate, he thinks long-term Treasury yields could rise even more. As for the benchmark 10-year rate, he sees it getting close to 5%, and the 30-year rate reaching mid-5%. As a hedge, Ackman said he's still shortening 30-year Treasury bills. The yield on a 10-year Treasury note reached a 15-year high of 4.64%, while the yield on a 30-year Treasury note was roughly 4.76%. Ackman predicted that investors would face a very challenging period if they have taken out short-term loans at low fixed rates and are now being repriced, particularly in the commercial real estate market. Ackman's unique SPAC structure, known as SPARC, a special purpose acquisition rights company, was recently approved by U.S. regulators. Under this structure, investor will be informed of a potential purchase plan for the SPARC before they are requested to pledge cash. I would not be shocked to see 30-year rates well into the 5% barrier, and you could see 10-year rates approach 5% in the very short term. Bill Ackman disagrees that the widespread belief that the inflation is only transitory. He believes that this new normal of steadily rising inflation is upon us. You can be enthusiastic about equities if you buy high-quality, pricing-powering companies that can thrive in an environment with 3% inflation. They resemble royalties quite a bit since we own Universal Music, which is royalty on music consumption. The first characteristic that helps businesses withstand inflation is pricing power, or a capacity to raise prices without adversely affecting consumer demands. Because of their effective and affordable shipping services in comparison to other options, railroads have a lot of pricing power. For example, their pricing power during inflation allowed them to raise prices while keeping a steady client base, demonstrating the soundness of their business. Ackman's recommendation for investing in stocks that profit from the expansion of an entire sector is to buy stocks that are royalties on an industry. Rates are anticipated to rise as a result of a possible government shutdown, a finite supply of bonds, and a robust economy with steady inflation. Given structural inflation, low interest rates, fiscal stimulus, and a large deficit, it would be foolish for the Federal Reserve to enter into a 30-year contract with the U.S. government at a fixed price. With a peak of 99.1% in June 2022, inflation has reached levels not seen in generations. This is a dramatic change from a preceding decade when inflation was continuously low or even negative. Owners of price-sensitive companies can shield their capital from the damaging consequences of inflation. Bill Ackman, the billionaire hedge fund tycoon, disclosed that he was using options to short or wager against 30-year Treasury bonds. The CEO and founder of Pershing Square Capital Management issued a warning, citing structural changes to the world economy as the cause of an era of persistently higher inflation and, as a result, higher 30-year Treasury yields. These changes include deglobalization, the shift to green energy, and increased worker bargaining power. Ackman, however, has recently decided to stop betting against 30-year Treasury bonds because he thinks the economy could not be as strong as it appears and because of the ongoing tension in the Middle East and Ukraine. In a post published on Monday on X, formerly Twitter, Ackman stated that the economy is slowing down more quickly than recent data implies. He also stated that there is too much risk in a world to remain short on bonds at current long-term rates. There's less chance sustained inflation or higher long-term Treasury yields when the U.S. economy is struggling and there are more tensions across the world. The Federal Reserve would need to maintain higher interest rates for a longer period of time in order for long-term yields to stay high, but that is doubtful if the economy is actually experiencing difficulties, as Ackman claims, or if international conflicts worsen. Ackman's decision to cut his short position in the 30-year Treasury may indicate that his primary concern has shifted from an overheated economy with higher interest rates and inflation to a slowing economy that faces the possibility of recession due to geopolitical uncertainties. Ackman's large bond short was lucrative even if it didn't last long. It's unknown how much money he made. The 30-year Treasury yield shot up from 4.16% on August 2nd to well over 5% when Ackman cashed in. As year-over-year inflation increased from its June low of 3% to 3.7% last month, and the Fed remained largely hawkish. It also seems like the move was made at the right time. The 30-year Treasury yield hit 5.17% on Monday before Ackman declared he was closing his short position, and investors became alarmed by reporters of the growing number of Israel-Hamas casualties, which caused the yield to drop below 5%. Of course, not everyone shares Ackman's views on the direction of inflation, interest rates, and consequently Treasury yields, as is always the case in markets. Pay growth is still too high and likely incompatible with bringing inflation down to 2%, according to Brent Shute, Chief Investment Officer of Northwestern Mutual Wealth Management Company, in a report published. He pointed out that recent retail sales data shows that consumer spending is still robust, suggesting that the Fed could need to keep interest rates higher than anticipated in order to maintain price stability. Against the backdrop of unprecedented government deficits and political impasses in Washington, Lisa Shalit, Chief Investment Officer at Morgan Stanley Wealth Management, cautioned that investors continue to be concerned about economic instability. This may cause them to demand higher yields in exchange for their Treasury holdings. As the nation already struggles to finance its deficit, the growing sell-off in Treasury bonds underscores bond investors need to be rewarded for an expanding range of risks, which increasingly include geopolitical upheaval and demands on fiscal spending. Even before he established Pershing, Ackman achieved one of the greatest triumphs, one of the first investors to discover a problem with $1 billion credit default swaps, CDS, against mortgage-backed collateral debt obligations, CDOs, that MBIA was a counterparty to was 36-year-old Ackman in 2002, Ackman's thesis. Following his intuition, Ackman shortened the company stock and bought his own credit default swaps against MBIA's debt, speculating that the insurer would fail because of its exposure to CDOs. Ackman's perseverance paid off after 5 years of battling MBIA's management as the bond insurer shares and debt ratings fell sharply during the 2008 financial crisis. One of Ackman's early victories as Pershing's leader was Wendy's. Pershing acquired a significant portion of the fast food business in 2004 and was successful in pressuring management to split off Tim Hortons, which at the time was particularly a religion in Canada. After Wendy's split, Ackman would eventually sell his share at a significant profit, but the company's stock price underperformed without its fastest-growing division. That's all for today. If you liked the video, please give us a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notifications. Also, express your valuable thoughts in the comment section below. Until then, bye. Also, spend some time watching other videos on the channel.